All the right people are going to come, and all the wrong people are going to leave. You're going to have a beautiful home that brings you peace, and you're going to have a dynamic career that gives you purpose. You're going to wake up next to the love of your life and spill sweet words over morning coffee. You're going to have slow Sundays and wholesome holy days. Your art is going to be impactful, and you're going to be recognized for your devotion. You're going to travel and see the world, and you're going to encounter incredible people along the way. You're going to be seen for who you are and appreciated for all that you do. Don't worry so much, my friend. Life is going to work out perfectly.
Yeah, I think that's true. You know, I play that for myself about once a week. I said life is going to work out perfectly. Welcome back, guys. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice. The market's closed today, so you wonder what we'd be talking about. Well, I'm going to shed light on a story for me personally that it's affected me, and it's going to affect you as well, unfortunately. I'm also going to shed light on this institutional buying for GameStop and the benefits of it, like moving forward for GameStop. You guys don't know the show. You don't know the channel. Just tell you what it is. Welcome back. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice. And I just tell you, a lot of advice. That's it. Been holding GameStop for over 4 years now. Been buying the security itself. Shares within this company have increased in value over 100% over the last 365 days. As of last night, GameStop is officially up 100%. And we know that because last year, the same time frame, GameStop was worth around $13.40 a share. It's currently worth $27. You know, there's this thing about day trading that it's like a stigma for most people. I tell you, winners and losers, right? Somebody that's a day trader will buy a share of GameStop at 15 and they'll sell it for 20 and they'll make $5. And then they'll buy back in at 25 and they'll sell it for 27. They'll make another $2. And as GameStop runs up, they'll nickel and dime it in and out, and then they'll make videos and they'll brag that they got it right or that they're successful traders. I don't want to tell you about their losing trades. Let's just talk about their winning trade. They could have bought in at 15 and never sold. And how much gain would they have then? You see, nickel and diming for $1 or $2 here and there defeats the purpose of what you truly believe, or what I truly believe. Maybe you feel a little different. Maybe you don't understand what value is. The best part about GameStop is that they actually raised money. I want to let this be known for everyone out there. There's shares out there that were sold, a diluted float of 140 million shares. Guys, GameStop used to have a float of 304, 306 million shares. They now have 446 million. And what people failed to realize is when they raised that cash, they raised that money this year, they raised almost $3 billion. And people were buying in. And it's not that it's retail investors, you and I. Institutional holdings increased. You're now tipping the scales at 170 million shares held by institutions. The highest it's been in 4 years. The reason why they hold such a huge position is because GameStop is now considered a buy. Yes, numerous rating agencies out there are calling it a buy. Unfortunately, stock analysts don't want to put their name next to it because GameStop refuses to give out any guidance. When GameStop started giving out guidance 4 years ago, every analyst said, oh yeah, well, we're just going to stop giving you a rating. We're going to stop giving out this analyst, right? This analytical info or what their assumption would be on value for the shares of GameStop. Therefore, the price gets driven down all the way to the ground. People lose money, hope, and they have this fear. The FUD sets in, the fear, uncertainty, and doubt. No. You are fearless. You that watch this show, you're fearless. The 30,000 people that I have on all the platforms, right, that we have built this community are severely informed when it comes to GameStop fundamentals. GameStop, the company, the one that the world will tell you is going bankrupt, that it's going out of business. Oh, didn't they just shut down? No one's ever there. It's empty. They had $4 billion in sales. The trailing 12 is $4 billion in sales. Their profit, their gross profit margin has increased 5% year over year. Their cash on hand has increased from $930 million all the way up to $4.6 billion. More cash than Target, more cash than Home Depot. Hell, just as much cash as Palantir, the darling of the S&P 500 today. They're the fourth largest cash position of any retail company in America right now. It says a lot for a company that doesn't have liabilities over $1 billion. It says a lot for a company, for a CEO that works for free. You think this is an echo chamber? I'm going to tell you something. It is. It's the echo chamber of truth. GameStop sold 140 million shares for a grand total of $24 each. $24 and some change. $24.74 maybe? What's the low on the stock for the month? Where did they try to push it down to? Where could it not go? It couldn't dive below the 200-day moving average of 2470, 2480, 2490. Nope. Because you're thick in the waist right there. That's where we propel from. $25 a share. I'll just ballpark it for the people out there who can't do the math. When GameStop diluted their float, it's a mental exercise for some of you guys who don't know the markets. I'll explain. When companies dilute their float, they do it for a couple of different reasons, but you see the signs before it ever happens. You see insiders start selling off their shares. You see the guidance come out and say, we need to raise capital. We're in a troubled spot, right? The going concern is what's written on your 10Qs and 10Ks. When you actually file, there's fear out there. There's a disclaimer. Not at GameStop. There's no going concerns. There's no credit facility that they need to borrow money from. They deleted their credit facility. They got rid of it. That right there should strike fear in the heart of every short seller. That's GameStop giving you the smoke signals. We don't need to borrow money. We're going to survive, we're fine, and we can thrive off of our own credit line. To have the ability to invest their money the way they want without having to answer to a bank or any covenants, that's financial freedom. That's the governance you're looking for in a distressed credit cycle. In an investor's world where interest rates are sky high. Not the GameStop. There are no interest rates. The interest rates are in their favor. You know, when there's a buyer's market and a seller's market, we look at housing, for example, 7% on housing. What is housing? What do? They get creative financing. It's now we'll pay all the closing costs. You can get a house at any price. Debt to income ratios don't matter. It doesn't matter if you're 55% of your debt to income. Can you make the payment? I've seen people get creative. Automobiles are doing the same thing. Housing's doing it. We've investigated that here on this channel this whole time frame. This last 4 years, we've talked about housing, we've talked about autos, because we talk about what's discretionary. What are you spending your money on, America? Hell, I know you don't want to pay taxes. How guilty do you guys feel right now? How bad does it feel? I can't file because I've got Department of Government Efficiency, aka Doge, coming out here showing you the shortcomings of the world. And I know my money goes to bullshit. I get it. I figured, you know what? It's just the perks of living a privileged life. We live in America where there's running water, electricity grid that works, and cars that you drive down the road. But if you've ever lived in a third world country, Privileged individuals drive vehicles. Privileged individuals eat out every night. And here, it's just a standard of living. So let's talk about it. There will be signs. That's the name of the show. There will be signs. There always has been. There's signs that we're completely right about GameStop. There's market manipulation within it, and maybe some people are going to crack down on it. You guys are telling me about the Department of Government Efficiency _ SEC. Now, I realize they put every single federal department under a Doge name tag on Twitter. I get it. Doge _ HH, what is it? Homeland Security. Doge _ SEC. Doge _ FEMA. Doge _ you said doesn't exist anymore. But I'm just saying, when there's a Department of Government Efficiency, Doge _ private equity, maybe I'll really care so much. Guys, here's the problem. I'm watching Elon Musk and Trump and them expose all the truth, but what does it do for me? I'm not getting a single dollar. My shit's still expensive. It's still, yes, the truth is there. It's exposed, but who's going to prison? Hillary Clinton still walking around? How about Chelsea Clinton? Chelsea Clinton, who's on the board of directors of numerous companies with zero credentials and credibility, making $84 million a year. Oh, the Clinton Foundation, the Obama Foundation, the Gates, whenever they try to tell me about these foundations, whenever I hear the word foundation, I just should think automatically thief, grand thief. Like they know what to do. Make a nonprofit organization and funnel the money to it. That's what you do. Allegedly, that's how it's all done. People are up in arms about Elon? I'm sorry. I can't be up in arms about Elon. Because I grew up in a world that's been run by Democrats for the last 20, 30, 40 years. Since Reagan died, Bush is kind of okay, the first Bush. But beyond that, who would we have? Clinton for 8 years, Obama for 8 years, Biden, and then sprinkled in there is little Trump and a whole goddamn 9/11 hoax. Don't even get me started. But all these recessions and all this reset that we have to live through was run by George Soros, Bill Gates, making decisions for you. And now it's a damn problem that Elon's sitting at the table. Now they're just public with it. They're just transparent with it. They're utilizing Twitter for it. That's fine. How about I ignore all the signs? How about I do that? I just watched a guy. You guys don't know him, and I'll never speak on it directly. But I watched a guy who makes half of the income I make. Half. And he bought a house for $100,000 more than mine. And I said, how? What bank, what broker signed off on that deal? Because there's no way. And I'm telling you there's no way because I live a very regiment lifestyle. Like I cut it all up. I see what I could afford, what I can't, and I'm looking around saying there's no way on God's green earth that anyone should be tied down to these mortgage loans that are coming across the table with the rates that are being done. So I started doing some digging. I did the homework. What's the phrase? So you don't have to. And I'll play what I found. It's going to rock your world, guys. There'll be signs. There will be. But before we get there, I was talking about GameStop for a little bit. Institutional ownership is increasing. All the 13Fs were filed 2 days ago on Friday, last Friday. And I know the market hasn't opened up today, but when the market opens, people are going to realize that everyone's increasing their GameStop percentage. We'll go look at it right now. So this is Fintel. Fintel reports, as you can see, GameStop ownership is increased. And this all the green here in the world, even at the top, even Citadel bought 3 million shares. The Royal Bank of Canada buying 17,000 shares. Okay, I'm showing you right here. Percentage of increase, 63%. Morgan Stanley increased 27%. They're 1.6 million shares. To give an example, reported value of $50 million. $69 million by Jane Street. $51 million on calls. Okay, to hedge the position, they also bought some puts. That's okay. That's what hedge funds do. But as we keep coming down, guys, we'll see people like Susquehanna coming in at $97 million. Right here on calls again by them, $198 million worth of calls. As I look through these, all these right here, they're buying shares like you wouldn't believe. When I tell you guys they can't find them, they can't find them. It takes them months to report that they've increased their percentage of shares, or that they bought 3,000 shares, that they have 79,000 shares on calls, that they bought 1 million versus 1 million. They're just hedging their own position, right? You go through, you see they bought 65,000, 25,000, 3 million shares by UBS. There it is. There it is. TikTok just blocked and banned me on my show. And it said, for misinformation, I'm reading you Fintel. I'm reading you Fintel stats. How is this misinformation? Thank you, TikTok. I appreciate you guys. I don't care about getting blocked on TikTok. Life will go over. You know, what can I do? What can I do? Oh. Shout out to my Theo. He just texted me and said, Happy President's Day. Anyway, UBS. 3.1 million shares bought. Everybody's trying to get in here, guys. 192,000, 227,000, 139,000. We'll go again, 213,000. You want to know what Sandler's doing? They're buying puts, right, to hedge what they just got. How about this one right here? D.E. Shaw buys 1.6 million. This all just got announced. GameStop is complete buy. A complete buy. Everybody wants in. State Street, 12 million. Reported shares, 10.52% increase. 3 million. 3 million. Citadel, 3.6 million. Actual shares. Oh, they have calls for 3.9 versus their puts at 5.3. Now, I know there's 200,000 shares available to borrow, 2.2 million actually available to borrow. I get that. All these guys are buying shares to let them out, loan them out. Northern Trust Corporation, right here, Northern Trust, 3.3 million shares. Slate Path Capital, 1.9 million. 1.3 million. Dimensions Fund, right here, boom. More calls and more shares. What is this? Renaissance Technologies, 817,000 shares. 500,000 shares. Invesco. All of this is happening right now. This is right now. This was Friday. 700,000 shares, 200,000 shares. Who's buying all these shares? 6 million shares is right here. What did they increase? Reported value up to $200 million. Everybody wants in on GameStop. I don't care who they are. Vanguard sitting on 39 million shares. Vanguard, 39 million. Almost 40 million shares. Almost 10% of this company. Vanguard is sitting on 8% of GameStop. Right here, BlackRock increased as well, and they're at 34 million shares. It's amazing. It's amazing. They increased 8%. These guys increased 3%. They show you the percentages of increase. Somebody increased 1,000. Look at this, 100% increase. They're now at 2,700 shares. I know it's not a lot to some people. You don't understand. There's 590 institutions that now hold GameStop. I remember when there was only 300. It's almost at 600 institutions holding GameStop. It's phenomenal. Everyone's buying in. 590 institutional owners. GameStop is up 100%. Long. 561 are long only. Short only. Only seven. A lot of people need to know this. Only 7 institutions are actually short on GameStop. Only short. Meaning they have nothing to hedge. They're betting on the downside. What due diligence are they doing? None. $5 billion of GameStop are long. It's a lot of money. A lot of money to be on it. Right here. 170 million shares institutionally held on GameStop. It has changed since the last quarter. 15 million shares bought. They bought 15 million shares this last quarter. An increase of almost 10%. You want it? There's signs, guys. There's signs. Now back to the housing. By the way, these guys, these jokers, underperform. Wedbush, they haven't said a damn word about GameStop in almost 6 months. They used to report on GameStop. Look at this, guys. I want to show you something. Every year there was a report 5 times in 2023. 5 times in 2023 there was a report. In 2023 there was a report 5 times. Nobody, and I repeat, nobody can tell me different. Look at this. I'm going to show you guys this. We don't care about that part. I know about the insider stuff. You know what? Oh, I like that part too. Check this out. Do you know how many people still own GameStop? Like Diana Slay, the CFO that quit, or the CEO, whatever she was, she's gone. You had Mark Ricupio. He still has 200,000 shares. Oh, yeah, 2 million, I don't know, millions of dollars, whatever they have. All those insiders that got shares over the last 4 years, they didn't sell any shares. Insiders not selling? Look at Wedbush, by the way. Wedbush had 4 updates in 6 months on GameStop. They maintain that they're underperforming and that their price target is $10. 4 updates in 2024. On the 3rd month, on the 5th month, on the 6th month, and the 9th month. We're 5 months removed from there. I've heard nothing. I've heard nothing. No? Okay. Maybe I should hear from them soon. Because in 2023, they did it 6 month, 2, maintains and reiterates. 9 month, there was 2 in September, maintains and reiterates. Maybe I should hear from them real soon. Maybe we should hear from them in March. I'll be waiting for Wedbush. All right, cool. Anyway, we're going to watch a video right now. Michael Packer is lame. Yes, I agree. You're going to love this, okay, guys? This video I'm going to show you is the reason why I went in and I saw that the state of California sponsored special home loan for watch this. All right, guys, wait till you hear this, okay? This video, I'm not even going to take credit for it. I did the homework to go look at it. That's about it. But you're going to watch it. You guys ready? Y'all want to see a dead body? I'm not going to say anything for 15 minutes. Take your notes. Get your pens and papers out and take notes. D.R. Horton, giving it all the way. Let's watch.
The housing market is showing cracks that nobody's talking about, and D.R. Horton insiders know it. In the last 3 months alone, D.R. Horton executives have dumped over $5.4 million in stock, and the timing couldn't be more suspicious. Hey everyone, welcome back. Today, we want to share something that's been keeping us up at night. We've spent countless hours analyzing data, speaking with industry insiders, and connecting dots that paint a troubling picture of what's coming in the housing market. What we've discovered isn't just concerning, it's downright alarming. Let's start with what initially caught our attention. D.R. Horton's executive chairman, David Auld, recently sold $3.9 million worth of shares at $156. Around the same time, another insider, Barbara Allen, liquidated $922,000 worth of stock. But here's what really raised red flags for us. There's been absolutely zero insider buying. None. When insiders are unanimously heading for the exits, it's time to pay attention. And here's what's really fascinating. This insider selling pattern isn't happening in isolation. We've studied the last 3 major housing downturns, and there's a pattern that keeps us up at night. In 2006, executives at the top 5 home builders sold a combined $300 million in stock before the crash. The scary part? Today's insider selling volume is actually higher when adjusted for inflation. History doesn't repeat, but it often rhymes. Let's break down where D.R. Horton is seeing the most pressure, because the regional data tells an even more concerning story. In Phoenix, one of their key markets, cancellation rates have hit 32%. That's nearly 1/3 of all contracts falling through. In Austin, they've quietly increased incentives to the highest level since 2008. And in Florida, they're reducing their land holdings by 25%. When you see a company pulling back in their strongest historical markets, it's time to pay attention. The market data that mainstream media seems to be overlooking paints an even darker picture. Builder inventory levels have surged 21% year over year, while the months of supply has jumped from 4.1 to 6.2 months. But here's what's really concerning. These numbers don't even include their shadow inventory. Looking at satellite imagery and building permit data, we've identified over 15,000 additional units that aren't being reported in their official numbers. We're seeing partially completed homes, permitted but unstarted projects, and what builders call spec inventory. Homes built without buyers that aren't yet listed. When you factor in this shadow inventory, the real months of supply jumps to nearly 8.5 months, a level we haven't seen since the last housing crisis. The affordability crisis we're facing is unprecedented, with mortgage rates hovering around 7% and median home prices up 45% since 2020. Monthly payments on a median-priced home have skyrocketed by 52% year over year. This isn't just a statistic, it's pricing an entire generation out of home ownership. Now here's where this story gets really interesting. D.R. Horton's public statements and actual actions tell 2 very different tales. While they're publicly projecting confidence, talking about strong demand and healthy market conditions, their actions tell a different story. They've quietly increased incentives by 60% compared to last year. They're offering rate buydowns on more than 70% of new contracts, and they've slowed land acquisition by 35% in key markets. Actions speak louder than words, and their actions are screaming. Now let's talk about something that's flying completely under the radar. The creative financing happening behind the scenes. D.R. Horton has increased their use of joint ventures by 85% year over year. They're offering more seller financing than ever before. If this sounds familiar, it should. These are the exact same techniques we saw in the lead up to 2008. When builders start getting creative with financing, it usually means traditional buyers are disappearing. Let me show you exactly what I mean. In their latest earnings call, they briefly mentioned alternative financing solutions. Digging deeper into their financial statements, we found they've created 6 new financing subsidiaries in the last 8 months alone. They're offering buy now, pay later options on down payments, something we haven't seen since 2007. Their mortgage subsidiary has increased its subvention rates, that's fancy talk for builder-paid closing costs, by 140% compared to last year. But D.R. Horton isn't alone, and that's what makes this situation even more concerning. Looking at their competitors paints an even darker picture. Lennar has increased their incentives by 45%, Pulte has slowed land acquisition by 30%, and KB Home's cancellation rate has hit a 5-year high. When every major player in an industry starts showing the same stress signals, it's not a coincidence, it's a trend. But this story gets even more worrisome when we look at what's happening behind closed doors. Recent internal communications leaked from D.R. Horton reveal a company-wide hiring freeze across multiple divisions. The documents also show they've quietly slashed their marketing spend by 40% in key markets. These weren't public announcements or press releases. These were internal directives meant only for senior management. Think about that for a second. Why would a company claiming strong market conditions be secretly cutting costs across the board? These are classic signs of a company preparing for rough waters ahead. And here's where the puzzle pieces really start coming together. These internal cost-cutting measures began just 2 weeks before those major insider stock sales we discussed earlier. Remember those millions in stock that executives were dumping? Now we know what might have been driving those decisions. The pattern is clear. The internal actions tell a very different story than the public statements. Here is the most mind-boggling part of all this. Wall Street is completely missing these warnings. Despite all these red flags, 65% of analysts still rate D.R. Horton as a buy. This feels like deja vu from 2007, when 70% of analysts had buy ratings on home builders just months before the crash. The disconnect between Wall Street's optimism and insider behavior is stunning. Remember, insiders make money by knowing their company better than anyone else, and right now, they're selling. And here's something else Wall Street is missing: the smart money movements behind the scenes. Major hedge funds have reduced their positions by 15%. Short interest has increased 32% in 3 months, and the options market is showing increased put buying. These aren't random movements. This is sophisticated money positioning for a downturn. What makes today's situation potentially more dangerous than 2008 is the nature of the crisis. Back then, we were dealing with a subprime lending problem. Today, we're facing something more fundamental: an affordability crisis coupled with a supply chain nightmare. Home prices are now 58% higher than 2008 peaks when adjusted for inflation, while wage growth has only increased 12% in real terms. Building material costs have surged 35% since 2020. Labor costs are up 45%, and development timelines are 40% longer. Let me share some data that really puts this in perspective. In 2008, the average home buyer needed about 32% of their monthly income for a mortgage payment. Today, it's a staggering 46%. That's with stricter lending standards and higher down payment requirements. D.R. Horton's own data shows their average buyer's debt-to-income ratio has increased from 38% to 43% in just the last 18 months. The technical signals are flashing red across the board. Housing starts have plummeted 18.5% year over year. Pending home sales have dropped 12% in 6 months. And builder confidence has fallen for 8 straight months. D.R. Horton's financials tell the same story. Gross margins have compressed by 280 basis points. Expenses are rising faster than revenue, and free cash flow has declined 25% year over year. Please take 2 seconds to help me out and hit the like and subscribe if you find this video interesting so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, let's continue. Here's what makes this market fundamentally different from 2008. First, we have an institutional ownership problem. Large investors now own 35% of single-family rental properties, compared to just 8% in 2008. This means when prices start falling, we could see institutional investors dumping properties all at once, accelerating any downturn. Second, we're seeing a massive shift in where people want to live due to remote work. D.R. Horton's internal surveys show 45% of their recent cancellations cited location flexibility as a key factor. They're stuck with land and developments in areas that might not match future demand. So what does all this mean for you? Whether you're a potential home buyer or an investor, these signals demand attention. Let us break down exactly what you need to watch for and how to position yourself. For home buyers, patience might be your best friend right now. Here's what we're seeing on the ground. Builder incentives are not just increasing, they're accelerating. In the last 60 days alone, D.R. Horton has rolled out new incentive packages in 37 markets. We're talking about rate buydowns worth up to $15,000, closing cost coverage up to $10,000, and even free upgrades that used to cost extra. The sweet spot for negotiating is coming. But timing is everything. Watch these 3 key indicators in your local markets. First, Monitor the days on market for new construction. When you see this number creep above 120 days, builders typically get aggressive with price cuts. Right now, we're at 98 days and climbing. Second, track the cancellation rates. The higher they go, the more desperate builders become to move inventory. We're already seeing cancellation rates approach 25% nationally. When this hits 30%, expect major price adjustments. Third, watch the spec home inventory. These are homes built without buyers, and they're the builder's biggest liability. D.R. Horton's spec inventory has doubled in the last year, and they're sitting on nearly $2 billion worth of completed homes without buyers. For investors, it's time to think strategically. The signs we're seeing suggest a significant shift is coming. Here's how smart money is positioning. They're reducing exposure to builder stocks ahead of what could be a turbulent period. The options market is telling us something big is brewing. Put option volume on home builder ETFs has tripled in the last quarter. But this doesn't mean there won't be opportunities. In fact, some of the biggest fortunes in real estate were made by those who positioned correctly before market shifts. Watch for distressed land deals. We're already seeing builders quietly shopping their land holdings at 15 to 20% discounts to book value. The key is to stay ahead of the curve. Keep your eye on these critical data points: monthly changes in builder incentives, cancellation rates by market, spec inventory levels, insider transaction patterns, and most importantly, the spread between list price and actual sale price. Remember, markets don't crash overnight. They crack slowly, then all at once. The smart money is already moving. The question is, will you be ahead of the curve or behind it? This brings me to one of the most powerful tools successful investors are using in today's market. Smart investors are using tools like foreclosure.com to be first to know when foreclosures hit their target markets by signing up for free alerts on foreclosure.com to catch investment opportunities the moment they arise. We've included the link in the description below. The housing market is at a critical juncture, and the signs are becoming impossible to ignore. Let's recap the key warning signals we've uncovered. D.R. Horton insiders have sold over $5.4 million in stock while offering zero insider buying. Their regional data shows markets like Phoenix and Austin flashing red, with cancellation rates hitting alarming levels. They're using creative financing techniques we haven't seen since 2008, and their competitors are showing the same stress signals across the board. Wall Street might be missing these warnings, but the smart money isn't. The institutional investors who called the 2008 crisis are quietly positioning themselves for what's coming. Remember, in times like these, it's crucial to watch what the insiders do, not what they say. Before we wrap up, let me share one final piece of data that keeps us up at night. In the last housing downturn, the builders who survived were the ones who recognized the warning signs early and took decisive action. D.R. Horton's own actions, from their insider selling to their land strategy shifts, suggest they see something coming. The question is, do you? Here's what you need to do right now. If you're thinking about buying a new home, bookmark this channel. Over the next few months, we'll be releasing detailed market-by-market analysis showing exactly when and where the best opportunities will emerge. If you're an investor, pay close attention to the next few earnings calls. Watch for subtle changes in language around market conditions and buyer incentives. These seemingly minor shifts often precede major market moves. And if you found value in this analysis, hit that subscribe button and notification bell. The situation is developing rapidly, and you'll want to stay ahead of what's coming. Drop a comment below, too, with your thoughts on the housing market. Are you seeing similar patterns in your local?
I'm seeing similar patterns. And I'm going to explain. Thank you for that video about D.R. Horton and the insiders dumping only $5 million. Is that what we're mad about? Is that what we're complaining about? I liked all the other info rather than just the insider selling, but it is a little telling, and I'll explain. So this video comes from ECONOFIN. I don't know what word they're trying to spell there, but Ecofin or something like that. I don't know. Listen, guys, my issue with the housing crisis that's upon us, I've been a home buyer twice in my life, and I cut my own deal 3 years ago, right in front of you guys, and I'll explain it and I'll talk about it. And then my first deal, though, was a train wreck. They knew we had $100,000 cash. They knew we had all this. We had all this stuff in front of us, and walked into a house with we had GI Bill. We had everything, and we walked in, and they asked for like $1,000 at closing. We didn't even need to do that because we were doing the GI. Like, it was weird, and it was B of A, and it was 8%, and it was for a house that was like 105,000, 120,000. I don't remember. I don't remember much about that deal. I was 22, 23 maybe. I don't remember anything. I just remember walking in and being like, yeah, we get some keys, we get a house, cool, whatever. It was not the event it was for the second time around. But I bought that one in 2005, 2006, 2004 or 5, maybe 2004. Oh, 2004, 2005, 2006. Holy shit. It was 2006. So I must have been 23, 24, something like that. I don't even remember. Yeah, 2006. Bought that house, and whatever. It all went downhill after that. But I will tell you, the housing crisis was right around the corner. When I got to California, I had moved to California, and I rented a house for $400,000. It was a $400,000 house. And that was the value, $450,000, whatever it may be. Rented it for $1,300. Yep, $1,300 was a good price back then. Didn't know that the housing market crashed, and all my friends started buying houses when the market crashed because their parents were very smart and helped them and told them, "Hey, it's a good time to buy a house for only $150,000. They're all $130,000." I had all this money in the world. I didn't know that I could have bought one. I didn't know. I was doing other stuff with my money, and it was not embarrassing. You live and you learn. You know, if you're surrounded when your parents aren't educated in finance, like my dad has a lot of common sense. He doesn't have that financial bug in him. But now he knows to go to his boys and his dad. He's like, "What should I do, guys?" And we're like, "Oh, Dad, you run out of time. No, you're okay." But you learn. You learn from your mistakes, and you capitalize on them. But let's talk about this, okay? I'm going to explain, like, housing today. Like, during COVID, the rates were all the way down to 2% and 3%. That's where you were. So, like, my wife and I, when we got I was like, it was a no-brainer for me. But to see the rates at 7% and these incentives that are being given, I've seen it firsthand. I saw someone go in and they bought a home for $600,000, and I know the stress that payment is going to do to that family, and I was just like, wow. Like, if you not thought that, but they don't have a choice, right? You don't have a choice because you look around. Like, I'll give you this example. There's a house up the street from me, and I've never seen it for sale. In all the years that I've been around in this world, I've never seen it for sale. This house is well known. Like, we know it. We pass by. It has gates, all this stuff. $7.5 million. And I've never seen it for sale. I tell my wife, I go, "Hey, baby, they're selling the house at the corner." And she said, "They are?" She's like, "Oh, I would never buy that. Like, the utilities alone, everything alone, you'd be like, you would drown, right?" But I'm just like, how bad does it have to be if you're selling that property? Like, these are things that you don't sell. I've seen that house my whole life. For the last maybe 20-something years, it's been like that house. Like, you drive by it every day, you're just like, wow, look at this thing. Nope. It's got a lake in the front yard. It's got a pool in the back, 9 bedrooms, 6 baths, and a whole bunch of square feet. You're like, they're selling it? Damn, it's crazy. I'm not a big conspiracy theory guy. I try not to be. Like, tinfoil, 9/11 was an inside job. We never landed on the moon. The earth is flat. Everything, right? But, like, strategic fires on the world's top retail footprint, whether it be Hawaii or Pacific Palisades, that's like, man, like, there was a coincidence. And you just don't know what to believe. But I'm looking at a housing market, okay? And I'm looking at the way they invest. And if you were watching the video, the key takeaways for me were investors own these homes now. We know this. We know BlackRock came in and bought a lot of homes, whatever it may be. All this real estate that they bought. At the time, I called it out and I said, hey, they're buying all these houses at elevated prices because they're saving the banks. Banks are leveraged on properties, and how do you do? I just can't give you cash, but I can take some of the stress off of you. And if I'm buying homes as institutions and I'm holding these homes and they have collateral, they have value, well, what's the first thing that's going to happen? They're going to dump these homes. And they're going to dump them at rates, at a loss. There's no way. Maybe I'm a doomsday guy. Maybe I'm looking at it too plain, but the signs for me is Bill Pulte Home Group. Bill Pulte, the young 30-something, who's been announced to be part of the Financial Housing Authority, the head of it for Trump's cabinet. I think he's going to be the fall guy. And I think he doesn't know it. Because he's dumb enough not to know. He's not intelligent. He doesn't understand finance or people. Bill Pulte is going to be the fall guy. Damn, that sucks. But it's true. It's true. You can't convince me otherwise. You don't put a guy who's never bought a home himself in that position. Oh, he's been given a lot of things in life. But doing it himself? No. Sorry. I feel this way about it. So, spec inventory. They actually talked about that in that. And I think about that often. Spec inventory. Inventory, I was reading this thing about skyscrapers being empty. That a lot of the commercial real estate in the world is empty right now. There's not businesses inside. There's not people. It's just a hollow building. And they're selling for pennies. People are taking losses for cash. And you're just getting cash, loaded. So these are opportunities for this market, opportunities for you as investors that you need to be aware of and that you need to be ready for. Because GameStop's going to be the hedge to a lot, but it might just be your vehicle to secure some things that you might find value in. That's all I'm saying. I highlight these things so you guys pay attention to the world around you. That's it. There's always signs. There was always signs. I tell you guys the story of when I saw shoppers buying thermometers in January of 2020. And they were asking for extra. Do you have any more? Are there more in the back? Can you get them more delivered? Can we? And I was like, what? Yeah, I've got to send them home. We're sending them to China. I was like, you are? Okay. I don't know. That was a sign that I didn't know. Another sign that you might not know is I was in 2008, 2009, and there was consultants coming to work and evaluating whether you're valuable to the company or not. For major corporations, I'm talking about corporate companies. I was like, oh, there's a sign. You got to be invested and you got to work for people that thrive when the markets go down, that might survive. Gaming will survive. People with cash will survive. They're going to find a way, and they'll even have maybe some cash burn. Maybe there's some hard times coming. But I'm watching insiders reposition themselves to get in the right position for GameStop. That's what I'm seeing. I'm seeing an increase in institutional ownership. I'm seeing an increase in diamond hands. And I'm also seeing an increase on the balance sheet coming up in about a month. You know, they say this thing about this spec inventory. They were saying, well, if it increases and it holds and they don't sell homes, inventory for 120 days, only because builders want to get paid. Everybody wants to get paid, and you're not just building homes and not paying for them, like as a contractor. So here's the thing, 120 days. They say, well, we're at 98 days right now. Well, what happens in 20 days from now, 22 days from now? GameStop's earnings coming, guys. It's coming. Let this help you push you over. That's all I'm saying. The markets aren't open today, guys. It's just you and I hanging out. There is a chart here that we get to look at, and there is some chat I get to read. I've got things to do today, like most of you, but I wanted to share some of this with you. Gaming industry is the best, yes, without a doubt. Biggest skyscraper in Minneapolis recently sold at a $130 million loss. There we go. They never said what caused that fire, right? Maybe some special lights, maybe something. I don't know. I've seen some crazy stuff. I forget what they call them. It's like a DE something. Not DEI, though. One of the better damn AI videos. Normally, I thumb down AI-generated content. There you go. Scum Street never loses? No, I guess not. We'll find out soon enough, guys. I'm going to go live on a sailboat. Oh, you're going to go live on a sailboat. Okay, cool. I think everyone should. Everyone is waiting for they want to pull the plug. Yeah, modern day Great Depression. Yeah, I mean, we're there. We're there. Direct energy weapon. There you go. A do. Something like that. Let's do this, though. Let's look at this. This is GameStop on the monthly. I like GameStop on the monthly. And looking healthy, looking great. We have this support at the bottom. We're still running up. We're in the month of February right now. The best thing I like about the month of February is that it's short. So we get the hell out of here. Currently trading 62 million shares. It's going to take a lot to get to these other months. We'll see how we do. But 130, let's see, right here. The least amount of volume was in a month was 63. 63 million, 53 million right there. 53 million, which was February of 2024. And that even had an extra day. We're already over that amount. We're at 62. So a little bit more volume right here in the $27 range. Back then, you weren't getting any dollars. You know, it was a $13 stock back then. We know what happened after that. We know GameStop went crazy. It looked good, but the low for last year, the same month, was $13.12. The high was $15.23. What would you give to buy these shares at $13 and at $15? I told everybody. I told them then. They didn't listen. I tell them now, and they're still second-guessing it. Don't second-guess it, because this isn't a pump and dump. This isn't that. This is a real company with real profits and real ownership, and it looks healthy. I really like it. So that's the monthly chart. We have months to play it out. We're okay. Just know next month you're here. They would have to push us down in March, which I think it's the breakout from this triangle here. So I'm excited. And we'll be on our way to this red box. And we're going to be trading in this red box come this time frame, which would be 2026. This is your playground. So give me a year to get there. If we get there sooner, you'll know exactly what we're doing. Here's the weekly chart. So we're going sideways, but these are just rip, dip, rip, dip, rip, dip, rip, dip. You know, this is what I tell you. The consolidation's there. It actually shows it. It looks good. It looks healthy. Healthy retraction on down to these levels, down to the 22 level if they could ever get there. I wish. It won't. But we'll get out of here real soon. On the daily chart, this is good. This is good right here. This is like amazing how it played out. It played out to touch the top at 34.40, came on down all the way to 200-day moving average, and then start bouncing up, and now we're above this. Well, we're fighting with the 50-day moving average. So that's our resistance, but we know that we can hit the top at 29, 30, somewhere in that range, and then it'll come back down. We'll keep playing in here until we break out of here. And we're going to break out of here. Once we break out, that blue line's now your support, and you go up from here. But this has happened before. This happened before because as we broke out previously, you have this range. I mean, look at that. It's right there. We're talking about from way back there, but you have one right here, guys. Right here. From the bottom all the way through, now that we found the support, that's the actual triangle you're going to break off of. You can't go below that right there. That's it. That's your support on the daily. On the weekly, I get it. We're way over here, but I mean, we're just forming a different angle. And we're headed up. That's Doritos going up and to the right. I'm excited. So, thank you guys. And then we'll go ahead and look at the 1 hour chart just for shits and kicks. Right now, guys, this is the love that you see for the stock. But who cares? Who cares? Because I'm just waiting for announcements. I'm waiting for the actual report to come out and what's going to be reported. GameStop diluted their shares previously, and they raised all this money, all this cash, and this is a good thing. It's a good thing for GameStop to raise cash and do it because they don't owe anybody money. People that dilute shares, people that raise cash, they're so scared because they're raising cash and they're doing all these things. But before they do that, before they dilute, what do the insiders do? They sell. They sell before. And then they come back and go, okay, here's these things we're trying to do because we're such a great company. Now, these guys selling shares, these insiders, they know that, one, they're inflated on value, and the market's just not real. They're pumping this market. They're holding it up. Like, I don't think Supermicro computers should be $47.91. Nope. There's no way. No way. How do you not? You haven't announced anything other than what you think you will do. You haven't told me how you're going to do it, rather than doing related party transactions. So I did see that NVIDIA dropped some of their private holdings, like in SoundHound, things like that. Yeah, we knew. We knew that they just pump things, hold it, and the world buys whatever they're pumping. So maybe that was a deal for someone else. Maybe that was a deal holding up another institution. But GameStop's totally different, guys. You're not going to find these shares. You're not going to find them at this price. And when these shares are double the value they are today, when they're $52 a share, $54 a share, when they're $54 a share, I want you to remember that you should have bought more at 25 and at 27 or at 30, like I told you. And all these guys coming in and out of the stock and saying, this is what I do, this is what I do. Nah. Nope. That's not what I do. I do exactly what I've been doing. I'm feeling good. Let's go look at that really quick. Because, your boy's around. All right, guys, here's my position. I'm green. My position on GameStop puts me up $2,000 something on it. I have over $25,700 worth of GameStop currently. And feels good. Feels good to have, 25 grand sitting there. If I need it, I can go get it, but I'm not going to get it. I'm not going to go grab it. This was sent to me by a guy on Twitter. I actually like this guy. This guy's pretty good. And he's explaining to you what GameStop's doing, selling shares, offering shares with their $4.6 million. This is the part that I liked at the bottom because, we know this part. But so GameStop actually offered their shares, sold them at $24.78 on average, the whole amount, 140 million shares. GameStop also has the ability to buy back shares. And if GameStop were to buy back the shares, if they ever fell down to $20, for example, if they ever hit $20 and GameStop comes buys back all the shares that they sold, they would net $670 million. They would spend their cash, I get that, but they would actually net it, and we'd end up at what? A share price to infinity and beyond? Because we'd buy back all the value. We'd shorten up our float. We'd buy back the 140 million, but we would have netted, $670 million on the books. That'd put you at around 1.6 billion on a float of 300 million shares. You'd be getting about 50 cents a share. 50 cents a share on hand, on book, and that's huge. That's huge for what it's worth. Earning wise, what could they do then? What could they do then? So, I like what GameStop does, and I like the way they do it. And but I don't think they're going to buy back shares. I was just saying that's what you could do. Here's the thing: I think GameStop's going to come in at $5 billion. That's just the number. I just grabbed the number out of the thin air, and hopefully it works. And people are going to be like, how the hell are they getting $400 million, Marantz? You know, that on cash, because that'd be cash, right? I don't know. I just said it. I don't know if it's real. I do know, but, you know, I like to mess with the Meltdown a lot. Hey, Meltdown, check out this website called GameStop.com. They actually have over 2,000 cards again. Tony Pollard rookie card, not a bad card, but he was still with the Cowboys. Chris Mullins. Is that his rookie card, man? Chris Mullin, man. Damn, $62 for that card. It's a nice card. But there you go. 2002. 2002. That was a good year, 2002. I don't know if it was Carson Palmer year or somebody. It was somebody decent. That's what I remember. Yeah, shout out to the DR Horton video. It was a good video. All right, guys, I'm going to get out of here. I'm happy you guys got your info today. Hopefully you guys got a little bit of, just enough, okay? And like I said, I don't care what Doge investigates because it's not hitting my bottom line. So you guys can keep getting excited about the information coming out, but it's just information. People aren't getting, they're not going to prison. I don't see anybody, on re-election night shaking their boots because of the Doge investigation. These guys all still have jobs, and it's all still bullshit. So, hey, I will tell you this, though. I posted a screenshot of all the homes for sale in Virginia and D.C. They're all for sale. That's because the gravy train's over, babe. You're not getting any more checks. You got to sell your house and get the hell up out of here. That'll be the first market to go. I'll be here. I'll be watching it, and I'll just keep buying GameStop because I know what GameStop is. GameStop is the true hedge to everything you see in this world. That's what it's been for 4 years. I'll be here to tell you I told you so. GameStop. Can't stop, won't stop. GameStop. What song should I play walking out the door, millionaires? I'll take requests. Since I played all my sappy love. I actually like my songs that I played. I honestly, guys, I like the songs. They put me in a vibe. And you know what? I want to stay in the vibe. So, are you even real? Get at me.